What's up, crypto fam? It's pretty boring in the markets, isn't it? And I can understand where you guys are coming from. I feel the same way. But looking at some correlations that we should all be starting to pay attention to that are outside of crypto, so we can understand how money flows a lot better on a macro scale. Because as we know, crypto is a very small blemish, in terms of the size of the market at $1 trillion. ESG market, for example, is about 40 trillion plus even, and that's just one other market. So we're very infantile right now. So we got to start looking at the macro perspective and what's actually starting to happen, what people are preparing for, and how come I think we're going to be okay for the next couple years, but then we're going to probably have some type of major crash. So we're going to look at the charts today. I'm going to explain that to you as well, and some really interesting correlations. So don't go anywhere. And if you guys are watching this, hit that like. It doesn't take very much effort. Subscribe to that channel if you're watching on YouTube. And if you're watching on Twitter, make sure you hit that follow on the Coach K, because I'll make sure I give you all the alpha that I find so that you guys can make the best decisions and fish for yourself. Hey guys, so what I wanted to show you today is what is the DXY and SPX, kind of explain them and how their correlation can help you understand the macroeconomics of the market. So with the DXY, you have the money currency index for the US dollar. So when are people buying US dollars, or when are people putting money into US dollars or selling US dollars? So it can kind of tell us where the market's going to go from the US dollar perspective, right? Obviously, there's other currencies, but we're just using this one as our example. Now, obviously, correlations. Are there correlations with the SPX? So the SPX index, the NASDAQ, Dow Jones, are all the stock markets. What do those do, and how are those correlated to the DXY? Well, pretty simple as this. If you have people selling a lot of stocks, there's going to be more cash. So you're going to see that those numbers start to rise. And when you see people selling off a lot of cash or spending cash, usually they're buying assets. And you see this correlation between the DXY and the SPX. So if we look back in October, it was pretty much at the top area right here. And that's actually kind of where the bottom was right here before it started to rise. So you see there's a correlation between the two. Also looking at the 25th of July, right? And then we can go back to the DXY. That was about the time the DXY started pumping, because the SPX started selling off, meaning people were getting more cash. They felt the market was a little bit overhyped, or they saw the double top that was clearly pretty much evident on this chart that took a long while to get to. Whether that means we're going to dump or not, I don't know. I'm not a doomsday believer, guys. I am not a doomsday believer. I think the markets are going to be fine for at least a few more years. So just keep that in mind. So you see there's a correlation there, and those things can help you with your Bitcoin and Ethereum analysis, right? So now what I'm going to do is I'm going to go back and put on the normal Ichimoku for the crypto cycle, because it's a little bit different settings. And looking at Bitcoin, and then we're going to do the same thing. So Bitcoin to DXY, DXY July 25th. Where was Bitcoin on July 25th? Here's July 25th. So right around the top for BTC before it started to drop about. They're very correlated as well. Okay, what was Bitcoin in October? So you go to September, December, October. Here's October. Going into November, it dumped pretty hard, and then it started to pump. What happened on the DXY? Okay, September, October, and it also dumped and then pumped and then started doing its thing. So we had a little bit of volatility, and then it went into that same movement the Bitcoin pretty much went into, where it really pumped super hard. So we can see these types of correlations, and they're things that can help us make decisions when we're looking at the market. Now, obviously, I have a lot of various ways to look at the market. I use levels like everyone should, but I also use the Ichimoku Hinko Hayo. And as you can see, the circles are 3 inside downs, 3 inside ups. So always take in consideration, because it's one of my easy trading strategies. If you guys go back onto my Twitter, you can find that pinned in the post pretty much. You can find my 3 inside up, 3 inside down video. You could also go onto YouTube and watch it there too. So those will explain to you how often I'm right about these. It's a daily time frame. It's a little slower, but you make more money consistently versus trying to trade a market that does a lot of whipsaws and a lot of volatility, and it just basically keeps causing you to lose money. This is more of a longer term mindset, longer term play, how you're going to earn money over time and you're going to be more successful. And money, as long as you keep stacking on money, it actually grows a lot faster. So that's pretty much how you have to think about it. So anyways, I am seeing Bitcoin kind of come down to at least this level again to retest 25. You know, it's been holding up. It's been doing decently. We're seeing some signs of life. We're getting close to that. Like I told people, around October 22nd to November 20th, I think the bull market will kind of show that it's over and it's going to start coming back slowly up and to the right. Not go crazy, not closer to like, you know, December, January, February. I could see things starting to ramp up. But I think right now we'll have like that nice smooth, people don't believe, disbelief rally. And it kind of goes in with this where, you know, I was talking about, this is where I was thinking we had that disbelief, we'll come drop back down, maybe not as low as this showing was right here, but come back down and then go back into the hope, and we're back into like the next part of the cycle, right? So I think right now we've gone through all this horrible part of the cycle. We're at near the end, and the next halving is coming up in probably March or April, sometime where my level is right here. It's very unlikely unless we have one big dip before it happens, like we did in, you know, March of last cycle. But what are the chances of those things happening, right? Like pretty small. So anyways, yeah, so this is what I'm thinking the market's gonna go. And like, you gotta do your shit proper. Don't fuck this fucking cycle up, you stupid motherfucker.
Fat kiddo, huge fat kiddo.